This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on August the 18th, 2016. Our time is 8:48 Mountain. Our radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a show, they're archived on Harold's websites. He has two of them, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there for your portable device. Also on TuneIn, and we have our own YouTube page as well. Lots of different ways to listen to our radio program if you miss us Sunday afternoon on CHED. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. That's 1-800-432-1022. Our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. You can see it online at rarecoloreddiamonds.com, and it's the featured diamond of the week. You can catch it there. As we tape today's program, some interesting news out of Japan. You talk about manipulated stock markets. That's what's happening in Japan. The Bank of Japan's unstoppable rise to be the number one shareholder. There's a lot of people, obviously, around the world seeing manipulation. The Bank of Japan's controversial march to the top of the shareholder ranks in the world's third largest equity market is picking up pace. Already a top 5 owner of 81 companies in Japan's Nikkei 225 stock average, the BOJ is on course to become the number one shareholder in 55 of those firms by the end of the next quarter. According to estimates compiled by Bloomberg, the Bank of Japan governor, Kuroda, almost doubled his annual ETF buying target last month, adding to an unprecedented campaign to revitalize Japan's stagnant economy. Obviously, they've tried quantitative easing. They're going into the stock market, buying stocks, propping up the stock market. There's 225 stocks, top 5 owner in 81 companies, number one shareholder very soon in 55 of those. And Harold, it's just unbelievable. And we're going to talk after your commentary about negative interest rates in Germany. Unbelievable, the financial engineering that is happening in the world today. It's interesting to see, as we do our show on a weekly basis, how this plays out and how will it all ultimately end. Because the way it's going, I can't see a happy ending, I'm afraid to say.
No, you're 100% right. How can it be a happy ending when number one, people are never going to be able to retire unless you've got a ton of money, unless you've saved a lot of money and you're willing to sell your home and cash that in and rent, for your rest of your time type of thing. I don't see how anybody's going to be able to retire. The fact is that interest rates are, right now at around 1% or lower. So obviously anybody depending on interest for anything is going to be, tremendously disappointed. When you're making 1% on your money, which is nothing, obviously, then on top of that, you're going to pay your taxes on it and consider inflation and everything else. You're losing your money, putting your money into CDs, into the bank, anything like that. In actual fact, interest rates have to remain very low and, as Randy brought up at the beginning of the show, go negative. So the fact is that what does our future look like as far as being able to save money and as being able to live off of our money if we ever get a chance to retire? And it just doesn't seem like there's any chance that is going to happen. The only country that is willing to raise interest rates when the situation is correct is the United States. Everybody else is dropping interest rates, and everybody else is going into negative interest rates. So what does that tell you? This is here to stay. It's not a short-term illusion. It's going to be here for a long, long time. And the fact is, and I've been saying this for years now, Get your money out of Canadian dollar-based investments and get them into the United States-based investments, because the U.S. dollar is going to remain very, very strong. And when the economy, settles down a little bit here in the United States, the fact is that the Federal Reserve is going to raise interest rates. And they're the only country that can raise interest rates at this point without destroying their economy. And by raising interest rates, it strengthens your dollar. So the dollar has a major effect on several markets, mostly on the precious metals markets. We've known that forever because we've traded gold and silver for the last 16 years. And what we've seen is that when the dollar is weak, the gold market is strong. When the dollar is strong, the gold market is weak. And everything that I'm seeing moving forward tells me that the U.S. dollar is going to remain very strong. It's going to be the reserve currency for a long, long time. China's in huge trouble. Europe is in big trouble. We saw the British pound drop by 25%. Meanwhile, the U.S. dollar did take a little bit of a hit this week, but again, it's trading within a range. It's still trading right at around the 95-cent level. So basically, I'm very, very bullish on the U.S. dollar. I think the U.S. dollar will continue to strengthen, and when the job numbers are a little bit better or any good economic news happens, the U.S. dollar will strengthen again. And if we do get one interest rate hike, let's say, before the end of the year, or maybe even two, that would be enough, in my opinion, to break the U.S. dollar over par and then watch that market take off. When the U.S. dollar starts to take off and other currencies start to fall, it's like nothing you've ever seen before. For me and my clients, it's a godsend because, again, I've banked on this happening. And for the last 3 years, we've been very heavily into the U.S. dollar, and my clients are making a fortune. Don't forget, we don't trade the stock markets and the bond markets and the real estate markets. We deal in alternative assets. And at this particular time, every asset that you've basically been used to investing in, real estate, stocks, bonds, those type of things, mutual funds, all of them are very risky and very volatilely traded markets, especially the stock market. It's not where you want to have your money at this particular time. You do not necessarily invest in a stock market when a country is not doing well. And at this particular point, with everything that's happened with oil in Canada and in Alberta and in Fort McMurray with the with the fires and with the flooding and everything like that, these are very, very difficult and dangerous times. And the last thing in the world, Randy, and I want to see is the listeners to our radio show making a grave mistake. And the big mistake would be to have your money sitting in the stock markets at this point and mutual funds. 90% of the people that trade those markets lose their money. And what I'd love to see, because we really want our Canadian clients who've been had a rough ride over the last couple of years, especially, again, with the economy in Canada and the weak Canadian dollar, we want to see our Canadian clients really start to do well again. And for the last 3 years, our clients have been making over 25% in U.S. dollars. Add another 30 to 40% to the bottom line, and that's what the currency is giving you. So if you're not doing well in the markets, and again, I would be very shocked if anybody is doing well trading these markets right now. The commodity markets are all trading right now in a range. The gold market is trading between, $3.25 and $3.50, basically $3.60. It's been in that range for quite a while now, and there's no doubt in my mind that gold is going to fall. And the reason I say that is that fundamentally, gold looks very strong with ISIS and all the other problems around the world. Gold has done very well this year. It's actually picked up almost 30% from the beginning of the year. However, there is something looming in the market that is very disturbing, and it's the commercial banks that have the largest short position in gold and silver in history. There has never been a larger short position. So let's look at this for an example. Why would a bank like J.P. Morgan or a bank like that, a commercial bank, why would they risk hundreds of millions of dollars in a market like gold and silver, taking a position opposite of everybody else if they didn't think and know that they were going to be right in the market? Now, let's face it, nobody is 100% right in the market, but in all the years that I've traded the gold market, and that's been for over 30 years now, when the commercial banks come into the market, I take notice. And pretty well every single time that this has happened, the market has fallen. So I don't see any reason why the commercial banks would be putting on the largest short position in history if they didn't feel that they could move the market at some obscure time. Now, right now, the markets are very lightly traded. The fact is, in August, it's a natural thing that the markets will do crazy things that really don't have anything to do with the technicals or fundamentals, like oil, for example. Let's look at oil. Oil's gone from $52 all the way down to $39 about a week and a half ago, 2 weeks ago, and now it's back up to around $46. So it's not that the market all of a sudden is bullish. Nothing has changed. The fact is that everything about the crude oil market tells me that the crude oil has got to fall. There's huge oversupplies in the market. The economies in Europe are in disarray and they're not using as much oil. On top of that, there's refinery situations and everything going on. So as far as I'm concerned, these markets are trading just on speculation. You've got speculators that come into the market when the markets are low, like it was in oil about 2 weeks ago, and they bid it back up. There's no rhyme or reason for it because there's nothing bullish in the market about the oil market at this particular time. So in my opinion, and everything that I'm seeing in the market, I would be looking for gold and silver to fall, just because the commercial banks are short the market, and from my experience, they win almost every single time. Again, you don't know when this is going to happen, but August is a very slow month. A lot of people on vacation, then they get back and the kids are starting school. So August has been always a month where the markets have done things that really don't make a lot of sense. But I'm not concerned about gold. I think the gold is going to drop short term, and then with the elections coming up, I believe gold is going to take off and run. We've got two horrible candidates in the United States, and I think it's going to be a real issue the closer we get to November. A lot of things are happening in the markets moving forward towards the end of the year, but at this point, again, I see gold and silver falling. I see the oil market falling back off. Most importantly, I see the U.S. dollar strengthening, especially if there is a rise in interest rates, which I believe there will be sooner than later. And then on top of that, if oil is going to drop, I see the Canadian dollar falling further. So again, I put all of my Canadian clients in U.S. dollar-based private investments with me, and the fact is that the stronger the U.S. dollar gets, the more and more and more money my clients make, and I believe the U.S. dollar is going to be the strongest of all currencies. So if you're not doing well, if you're confused, if you don't know what to do, if you don't ever think that you're going to be able to retire, just do one thing. Pick up the phone and give me a call. Let me explain to you what we're doing for our Canadian clients and how we're beating the markets, and again, maybe it's something for you. So, Randy, that's the way I see things at this particular time.
Take Harold's offer and definitely run with it. Speak with him. Talk with him. If you've never taken the time, do it now. Give him a call, 1-800-432-1022. The call is free. Anything discussed is confidential between you and Harold. 1-800-432-1022. RareColorDiamonds.com is Harold's website. Our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. We'll talk about diamonds in the second half of the show. You can see this diamond, video of it, at RareColorDiamonds.com, featured diamond of the week. There was a diamond of a quote from Ross Healy, chairman of Strategic Analysis Corporation here in Canada. We've obviously seen Ross many times on the Canadian Business Channel, BNN. And there was a quote, and I thought it was definitely worth passing on to you because it really does hit on where we are today. Ross Healy says, the U.S. economy is operating at stall speed. The United States is in the fifth quarter of a year-over-year earnings decline. Valuations are among the highest in history, and interest rates are the lowest ever thanks to quantitative easing intervention and the ongoing lack of demand for loanable funds. A critical election is looming, with the U.S. Fed on the side of Mrs. Clinton, I suspect. Nothing must happen between now and then to kill the last generator of spendable value, the stock market, and so nothing will. You can count on it. After November, who knows yet? But between now and then, betting against the stock market is likely to be a fool's errand. The problem, of course, is that valuations are very high. We can identify 25 or more massively popular big cap stocks which, if a bear market were to ever transpire, will collapse easily, as much as some of the massively overvalued high-tech stocks that we identified back on the Canadian Business Channel in 2000. Only the financials can be considered as being cheap, but they require rising interest rates to shine again. And we are not going to get rising interest rates yet. Too risky to the stock market's health. What he goes on to say is, what do we do today in the environment that we're in with our clients' money? We invest for the least risk we can manage, holding a gold hedge in all portfolios while maintaining a touching, if naive, belief in the sweet hereafter by holding a fair amount of cash. He said, and this is the key to it all, winning is not our goal. Surviving is. Winning is not our goal. Surviving is. That from Ross Healy, the chairman of Strategic Analysis Corporation. And Harold has said it on past shows. It's the old Warren Buffett line. The rule 1, when it comes to investing, don't lose money. Rule 2, remember rule 1. Winning is not our goal. Surviving is. And Harold has told us that many times. Ross Healy now coming out and obviously telling us the same thing, agreeing. And we're in an environment where banks in Germany are charging to hold deposits. And I know a lot of people will say, well, this is only a small bank in Germany and it'll never happen here and it's only a few people. But imagine paying 100,000 euros into your checking account only to rack up negative interest rate charges of 400 euros a year. That may sound like a terrible deal, but that's exactly what one small German bank is doing. A community bank in southern Germany said it would charge a fee of 0.4% on deposits of more than 100,000 euros held in current accounts. The bank's new policy is expected to hit only a small number of retail clients. Local media reports suggest the total number of clients affected may be less than 150. The move, however, is an answer to the European Central Bank's negative interest rate policy. The trigger is the ECB's disastrous policy of low interest rates, which is having a greater impact, said Cornelia Schultz, a spokeswoman for the National Association of German Cooperative Banks and Industry Group. The ECB, which sets interest rates for the Eurozone, cut benchmark rates deeper into negative territory in March. Central banks in 3 other European countries, Switzerland, Sweden, and Denmark, have also set negative interest rates. Negative interest rates charge banks for holding on to cash. They're designed to encourage banks to lend money to boost the economy. Many banks in countries with negative interest rates have passed the burden on to their business customers, according to research by the Bank of International Settlements, BIS. But actually charging retail customers negative interest rates so far has been taboo. One thing we do know, in Japan they have negative interest rates. There's been a run on safes as people take money out of the bank, store their money at home in safes. The psychological impact of the actual money shrinking would be huge, and you would see a swath of customers at a level we've never seen before ditching any bank that imposed negative rates, according to Martin Lewis, founder of the MoneySavingExpert.com, a personal finance advisory in the UK. And Schultz says she doesn't expect negative interest rates to become mainstream just yet, but she warned about the impact of the ECB's policy on the sector. The ECB's extreme approach to monetary policy is particularly toxic to personal pension products, but also the stability of the financial sector as a whole. And we've talked about that before, Harold. If you have a pension plan, a defined benefit pension plan, expected to make 7%, and they just cannot do it based on what's happening in the world financially due to regulated rates, then there's going to be a problem. Where does the money come from in the future? And I still believe, Harold, when we hear a story like this, that they say it won't hit the average everyday person. I believe at some point it will, because this is not going away anytime soon. They'll start with the business accounts. Ultimately, they'll go after the small everyday person. It will take some time, but eventually it will happen. And that's why we've said to so many of those listeners that listen to our radio show on a regular basis, there are alternatives. There are ways to be making money immediately. And Harold, that's why we encourage people to speak with you. They don't need to be in an environment where they're losing money in a negative rate world.
You're 100% right, Randy. Again, negative interest rates, there's no way in the world that it is not going to hit the everyday person. It's got to. So, all they're doing is getting us ready and conditioning us in order to accept this. Just like they did in Cyprus a couple of years ago, when they did what they did with the bail-ins and all that. So, they try this, they see what the reaction is from the consumer, and in most cases the consumer doesn't fight back. They just accept it. And that's exactly what is going to happen in the banking system. So the banks are not making money. The banks have never, ever recovered from 2008 and 2009. They still hold all their debt. The fact is that just look at the stock prices, and they have not recovered. So the fact is that the banks are going to have to charge us and gouge us like they normally do in order to stay in business. And that's exactly what's going to happen. There's no doubt that we will see negative interest rates. The fact is that at this particular stage, there's a lot of people that don't have any money. In the United States, they're saying that 75% of the people have less than $10,000 to their name. So how in the world is anybody going to ever retire? They're going to work forever. And the fact is that if Bernie Sanders or somebody like him ever would have gotten into to be president of the United States, the U.S. would become a socialist government. They would take care of everybody, and that's what they wanted. And that's ultimately what it appears is going to happen, is that with people not making money, with banks, robbing us of just by our savings, just by putting money into their bank, the fact is that everything has changed. Life as we knew it, as we are growing up, if you're in your 50s and 60s type of thing, is totally different now. And when our children and grandchildren, 20, 30 years from now, it'll be a totally different world. We'll be in a cashless society in 10 years. So, again, we've got to gear up for this. We have to not only protect ourselves moving forward financially, we also have to protect our families because, again, the money situation has changed dramatically. And with the banks charging negative interest rates, with banks here in the United States and Canada charging 1%, nobody being able to retire, the stock markets are terrible, and 90% of the people that trade them lose their money, where is somebody to go? Where is the hardworking everyday Canadian going to go in order to survive financially? Again, we think progressively. We do not deal in stocks and mutual funds and bonds and real estate and all the conventional assets. Those don't do well in these particular times. What does do well is our private programs, and they're doing tremendously well, and they're exclusively for our Canadian clients, and it's worked out tremendously well. So give me a call. I'll explain to you what we're doing and see if it's right for you. But again, we're looking at a time when financially people are going to hurt because of low interest rates and soon negative interest rates.
1-800-432-1022 or rarecolorediamonds.com to connect with Harold. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August 18th, 2016. Our time is 9:12 Mountain. Radio show Ron 630 Ched in Edmonton. You can catch us on many different platforms. We are on YouTube. We have our own YouTube channel. We're on TuneIn. Also, we have our podcast through iTunes. Type in The World Financial Report on Radio. And the shows are archived on Harold's two websites, HESradio.com, rarecolorediamonds.com, streaming for you there 24/7. rarecolorediamonds.com is the website. Telephone number to speak personally and privately with Harold about the different investment programs that he has. 1-800-432-1022. Our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. It is a stunner. You can see it online at rarecoloreddiamonds.com. rarecoloreddiamonds.com, featured diamond of the week. Some diamond news coming out. Fancy colored diamond prices rose in the second quarter due to a noticeable increase in demand for blues and pinks. According to the Fancy Color Research Foundation, FCRF, prices edged up about 0.4% over April to June from the previous quarter. The Fancy Colored Diamond Index showed a 1.1% advance in blue diamond prices and a 0.7% growth in pink prices. The fancy colored diamonds were pretty much flat. Prices in the fancy vivid blue category jumped 8.6%, a leap that was underpinned by strong demand for the 1 and 5 carat sizes. Fancy intense and fancy vivid colored diamonds of all colored diamonds enjoyed robust demand in the market, driven mainly by supply scarcity, and that is not going to change in the foreseeable future, according to Eden Rachmaninoff, chairman of the FCRF's advisory board. The situation is obviously very, very good when it comes to colored diamonds. The strong performance of blues and pinks compared with some of the others was in line with long-term trends. And Harold, it's nice to see that on this index that's put together by the FCRF, we're seeing nice price increases on a monthly basis, and some of the top-end diamonds, as we saw with the fancy vivid blues, going up 8.6%. Some very, very nice numbers.
You better believe it, and that's going to continue, again, because they're just not making enough type of diamonds anymore. You know, that's why they go up so much, and that's why they're so rare. Why would somebody invest that kind of money in a diamond? Because it's an excellent investment. At the beginning of the show, you know, Randy's talked about Warren Buffett and his philosophy towards trading in other people. The fact is that you don't want to lose your money. The first thing you want to do when you pick an investment is pick an investment that is not volatile, that isn't going to plummet. And the fact is that that happens in stocks and commodities and real estate and bonds and everything, but it never happens in colored diamonds because there's so few of them. It's not a market that could be mass marketed. You cannot go into the diamond business and plan on selling, 2,000 blue diamonds. 20 blue diamonds don't exist at this particular point. So that's why these markets are going up so high. When we talk about investing, and I personally, when I'm looking at an investment, the first thing to me is capital preservation, to make sure that I don't lose my money. The second thing is the opportunity to make money. You know, when you go into an investment, there's never a guarantee that the markets are going to go your way. You always try to do your research or talk to the right people and try to make an informed and intelligent decision. But in most cases, the fact is that with stocks and commodities right now, we know that they're being manipulated. So no matter how much work you do on it, no matter how much you think you know the markets, there are other situations out there, whether they're government-related or bank-related or whatever, that will affect the market on a short term and almost throw you off what your recommendation is. I'm looking at that in oil right now. There's no doubt in my mind that oil has got to go lower. So why would oil go up 6 days in a row after dropping down to $39? Markets like that don't make sense. And the fact is that unless you're an expert trader, you don't trade those type of markets. However, when you look at alternative assets like art, like diamonds, like classic cars, like those type of assets that are doing tremendously well at a time when most people are not making any money, it's because of the rarity of these markets. So yeah, I know Eden very, very well. I've known Eden for over 10 years, and the fact is him and I work together. Very interesting thing about Eden, he's Israeli, and he was one of the top marksmen in the Israeli army, and he grew up in the diamond business, so he knows his business. And the fact is that what he's saying is true. These are the assets that are going up in value. Now, you don't buy a diamond and hold on to it for a year or two or 5 years type of thing. You're just not going to make that kind of money. It's not that type of investment. It's a longer-term investment. You put it away to make huge sums of money, not just a little bit of money, but huge sums of money. You know, the beautiful thing about the rare diamond market is that when my Canadian clients first started buying diamonds 10 years ago, 8 years ago, 5 years ago type of thing, there was a big difference in the currency. The Canadian dollar and American dollar were basically at par with each other. In fact, the Canadian dollar at one time was stronger than the U.S. dollar. Now, the U.S. dollar is 30% stronger than the Canadian dollar. That means that all of my Canadian clients that own diamonds, forgetting about how much the diamond actually went up in value, just in the currency alone they made 30%. And soon to be, I think, 40 or 50% as the U.S. dollar gets stronger and stronger and the Canadian dollar weakens and weakens. So, again, when you go into investment, you do your homework. But again, most people don't know about alternative assets. We've done all the work for you. Just read the newsletter, read our reports, go on the internet and read as much information as you can on blue, green, pink, orange diamonds. You're going to find that these are the best assets you could own at this particular time for the long term. Rather than to buy stocks for your retirement, buy diamonds for your retirement. It's the same thing, except you're not going to lose your money in your diamonds. In stocks and mutual funds, 90% of the people trade lose money. The other fact is that most people that trade in those markets don't know how to trade the market. So if you're in a retirement savings plan, for the last decade or so, nobody's made money in the market. So what is the point of a retirement savings plan and putting your money in stocks just because you believe that you may be able to save some money on taxes short-term at the interim? You know, the thing about putting money into a retirement savings plan, the government allows you to put money into an RRSP and be able to trade or put that into certain investments that the government is comfortable with, mostly stock and mutual fund related, and over a long period of time, hopefully that investment goes up in value. Now, you're not paying taxes initially on this money that you're investing, so you're deferring your taxes until you close out your retirement fund. And that makes an awful lot of sense, as long as your retirement savings plan is making you money. If it's losing you money, you have totally defeated the purpose of investing in a retirement savings plan, because you put this money away, you didn't have to pay taxes up front. However, the investment that you're making after 10 years is losing money. And then when you go to cash it out, you have to pay your taxes on it. You're going to lose a fortune on it. The fact is that many of my clients have gotten out of their retirement savings plans and put their investments into private investments with me and are doing tremendously well. So there are opportunities out there. It doesn't matter how big of an investor you are. The most important thing is getting the maximum return on your invested dollar, and for most people at this point, that's an impossibility. So between buying physical diamonds and investing in our diamond programs, which are based around rough, uncut color diamonds, again, we're doing way better than the mainstream. And as a Canadian, and as Randy is a Canadian, and I'm a Canadian, and our show has been in Canada for 17 years now, again, our only focus is on our Canadian clients. We want our clients to do well and get through these difficult times. So, again, if making 25% return on your money in U.S. dollars is of interest to you, you need to get in touch with me. In the meantime, the diamond market is doing tremendously well. Yellow flawless diamonds go up by about 12 to 15% a year. Those are a perfect investment to put away for your kids and your grandkids as far as retirement. If you're listening to the show in your 20s and 30s, don't put your money into a retirement savings plan. You will not make money with it. Buy some diamonds, put it away for the long term. You know, I've told this story many times, but my wife's girlfriend inherited a 5-carat pink diamond from her grandmother. Her grandmother bought it 50 years ago for $50,000. The diamond today is worth $5 million. There are countless, and I mean countless stories like that. I could spend the entire show telling you stories of diamonds and what they've done in the past. Shirley Temple's diamond was originally bought back in the 40s by her husband for $20,000, less than $20,000. And what did it sell for, Randy?
It was her father who bought it for a birthday for her in 1940. It was around $7,200, and they ended up taking it to auction and it sold privately after the auction, and I think we were looking at around $25-30 million.
Okay. So you're talking, yes, it's a long time, 70 years to hold on to an asset that was passed down from generation to generation type of thing. But a $7,000 investment that turns into a $20 million return, are you kidding? It's only available in alternative assets. That will never happen in stocks again. It will never happen in real estate. It's not going to happen anymore. We're getting 1% or less return in the bank. Nobody's going to be able to retire making 1% in the bank. If you don't get progressive, if you don't look at alternative assets as a way to, number one, stay ahead of things and make some money for your future, so maybe one day we can have a decent shot at retiring. You're never going to do it if you just sit back and invest conventionally. If you talk to your stockbroker or your money manager, he's going to tell you, yeah, well, if the stock market falls, it's going to come back. Well, I'm 62 years old now. Many of my clients are in their 60s and 70s. We don't have time for that to happen anymore. We don't have 6 or 7 or 8 years to sit back, to wait back to get to break even. The fact is that the way that we used to trade no longer works anymore. And if we're going to be prehistoric and continue to do what our fathers and grandfathers did, we're never, ever going to build wealth. And we're never going to have anything left for our kids and grandkids. So, again, we have opportunities. I've been very fortunate in my career as somebody who has been very fortunate to be able to pick trends in certain markets. And these trends have been tremendous. Just ask any of my clients that bought gold at $250 and rode it up to $1,900 and see how happy they were with that trend. The biggest bull market ever in history, only 2 people called, myself and John Embert. Only 2 people called that market. And my Canadian clients, when I started on HED Radio back 17 years ago and made that recommendation, we were the laughing stock. But when it went from 250 to 3 to 5 to 7 to 1900, people started to understand the importance of picking a trend, not just picking a stock or picking, one thing that you hope is going to make you money. So the fact is that the next trend in diamonds, we've seen what's happened with pinks and blues. They've skyrocketed in price, and pinks and blues will continue to do so because there's not going to be any more of them. The Argyle mine is closing, and there goes 95% of the pink diamonds. But the next trend in diamonds, along with the pinks and blues, are green and orange diamonds. You could get in on the bottom floor of that. You could buy these diamonds at still reasonable prices and watch what happens. Last month, a vivid green diamond sold, it was a 5-carat diamond, sold for $15 million, $3 million a carat. It shocked the industry. Didn't shock me, didn't shock Randy, didn't shock my partners who deal in these diamonds every day. But the fact is that a diamond sold for $15 million, $3 million a carat, and nobody even knew that these type of diamonds existed. Green and orange diamonds, we're mining them as rough diamonds, cutting them and polishing, and then letting our client partner up with us on these particular parcels. So we've got so many exciting opportunities. There's no reason for you to sit back and worry about your financial future. All you have to do is pick up the phone and give me a call. Let me explain to you what we're doing and see if this is right for you. I think it's a life changer. And again, it makes coming to work every day exciting as opposed to stressful when you're dealing with markets versus, again, can you imagine that a stockbroker right now is dealing with most of his clients that are losing most of their money? And then on the opposite end of it, in our alternative assets, I don't deal with that. My clients make money every single month. So it's a totally different situation. Interest rates are at 1%. Soon they're going to go negative. The markets are volatile. They don't make any sense. If you're sitting in stocks or RSPs or anything like that, the chances are you're going to lose most of your money. Just pick up the phone and give me a call and let me tell you what the next trend is, and let me help you get back to financial health.
Connect with Harold, rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Featured diamond of the week is a 0.44 carat oval cut, fancy, vivid, purplish pink Argyle. It's a beauty. See it at rarecoloreddiamonds.com. Featured diamond of the week. And there was a great story from Reuters. If you missed it, it's in our free weekly newsletter. If you'd like to get our newsletter, the companion to our radio show, you can go through it in 5 minutes or spend hours if you want. Connect with Harold. Harold will send it out to you via email free of charge every week. 1-800-432-1022, rarecoloreddiamonds.com. And they say gold is not all that glisters. Diamonds act as a hedge for the rich. In a packed Christie's auction room in Geneva, one could hear a pin drop as two anonymous bidders slugged it out in their quest to own the world's most exquisite blue diamond. The room in the Four Seasons Hotel in De Bruges was filled with multi-millionaire collectors and diamond dealers, listening intently as the bidders, each speaking by phone to a Christie's representative, took turns, adding a few $100,000 in a tense struggle dragging on for more than a half an hour. When the auctioneer's hammer came down, spontaneous applause broke out as the winner, who actually asked for anonymity, bought a 14.62 carat Oppenheimer blue diamond for a world record price of $57.5 million, and obviously a record price for any jewel sold at auction. Now, the sale some weeks ago was the latest in a series of world record prices per carat paid at auction for naturally fancy colored diamonds, rare colored diamonds, extraordinarily magnificent and rare diamonds. With new fortunes being created around the world faster than at any time in history, more of this expanding elite wealth and these wealthy investors are looking at different ways of protecting cash now that it earns close to 0% interest in bank accounts. While some asset market turbulence can wipe out millions in hours, some are eyeing rare diamonds as a best friend, or a long-term haven at least. And it's no longer just a top table of the super-rich billionaires that are gravitating in this world. And they go on to actually say in this article, it's quite interesting, in such a scenario that we're talking about, investors are looking for the next best alternative to stocks and bonds and cash, diamonds. Colored diamonds are considered a safe haven, according to Philip Baldwin, Managing Director of Science Diamond Management BV. Colored diamonds are a hedge against inflation, currency risk, market fluctuations, and political uncertainty. Prices of vivid and intense colored diamonds have risen 10 to 12% a year on average since 1959. A great article. We can send it out to you via email. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. And there was one thing that Harold touched on, and he said, we don't have time to wait for the stock market to come back if it goes down again, which everyone seems to believe that is the case. Mark Faber said last week that he thinks we could see the S&P down 50%. Jeff Gunlack coming out, bond guru, coming out and saying sell everything. We had that great quote from Ross Healy today that we talked about, where he's saying winning is not our goal, surviving is. And it's interesting to note, when we were taping last week's show on Thursday, August 11th, the U.S. market session saw the three benchmark indices, the Dow, the S&P, and the NASDAQ, close at record highs for the first time since 1999. Think about it, Harold. If you were invested in the NASDAQ at the very peak, as some people were, it took you 17 years to get back to where you were before, and then you would have had to have done so by being in an index. If you would have just owned the stocks outright, you might not have been in the right stocks that were driving the index. So then even then you might not have made your money back. But let's say you were in an index fund for the NASDAQ. You would have taken yourself 17 years to get back to where you were. And that's the point you're trying to make, Harold. It takes a long, long time. If you pick the wrong moment to invest in overvalued markets, you can be in a position where it could take you a lifetime to get that money back. And that's something we don't want for our radio listeners to see that happen to them, because we've been through it too many times. We can't let it happen to us again, Harold.
You're 100% right, Randy, and that's an unbelievable analogy as to what's going on. So The fact is, I remember it in 1999. The Nasdaq was at 5,000, dropped all the way to 1,000, and it's just getting back to 5,000 now. So it's basically taking 17 years. And if you stayed in it, most people didn't because they got wiped out. If you remember, back in 1999, you could have thrown a dart against the wall and picked a stock that was going to double or triple. Those were times that people were either making or losing fortunes, and people believed that that they couldn't lose in the dot-coms. And that's exactly what happened. The Nasdaq fell from 5,000 to 1,000, and is now 17 years later, and the market is just getting to break even. And that does not mean in any way, shape, or form that the clients broke even. They didn't. In fact, most lost almost all their money because they're not going to stay in something for that long just to break even again. So, unfortunately, that's the way things are. People look at something, they see enthusiasm and excitement and think that they're missing out on something, and they go in blindly into a market. That is the worst thing in the world that you could do right now. Right now is the time to be much more conservative, but still give yourself an opportunity to make money. I mean, that's what we do. It's a utter shame, to have money and to not be able to invest it, not be able to make a return on it. That's what money is supposed to be. But the fact is that most people that invest lose, and the times that we're in right now is directly responsible for that. Nobody can make money when interest rates are at zero.
Very true, and that's why Harold has different programs in place today for you to start making money immediately. Give him a call, 1-800-432-1022. The call is free. Everything discussed is confidential. You can connect with Harold at rarecoloreddiamonds.com. Find out about the different programs that he has in place for investors. This week's featured diamond is a .44 carat oval cut, fancy, vivid, purplish pink argyle. If you would like to take a look at it, go online, rarecoloreddiamonds.com, featured diamond of the week. And you can take a look at it online. It is an absolute beauty. When you go on to rarecoloreddiamonds.com, it's like going to a museum online that has the world's finest diamonds. And as I like to remind people, it was 11 years ago this month that Harold brought to our attention colored diamonds, a special report that he wrote. Naturally Fancy Colored Diamonds, the best kept secret. We have that report. We can still send it to you if you like. And I have a timestamp, the beginning of November of 2005. So here we are, 11 years later. And Harold's website, rarecoloreddiamonds.com, has become legendary around the world for investing in naturally fancy colored diamonds, rare colored diamonds. And the results have just simply been outstanding for those that have been invested in this market. A guy that we like a lot is John Embry. He was interviewed by Egon von Greyers, and we have that interview in our free weekly newsletter. You can check it out in the gold section. But he also had a quote. He said, there are economic problems spanning the globe, and the geopolitical situation deteriorates by the day. I must admit, I have to tip my hat to those behind the curtain. If they can make it through the election in early November without a black swan spoiling their best-laid plans. But he says, in the meantime, gold and silver remain on the bargain table with minuscule downside risk and massive upside potential. And he goes on to say that he believes the next up leg for gold and silver, when it commences, he said, sooner rather than later, will be something that we see gold and silver in the shares go ballistic. Harold, we have about 1 minute left. And this week, one of our top stories, obviously, we're talking about Ross Healey. Winning is our goal. And winning is not our goal. Surviving the current environment is. A bank in Germany charging $100,000 euros. You're being charged 0.4%, 400 euros a year to hold the money in the bank if you're a business account. Those are the times we live in, and people need to obviously adjust with the times and learn where to make money, and that is with you.
Well, thank you very much, Randy. And yes, again, our programs are doing very, very well. It's a very, very difficult time. And again, just think about it. Going into an investment, not planning on winning, just to be happy to, maintain your position or keep your equity, it almost makes sense in that sense not to invest. So the fact is that these are the times that we're in. We have to be smart about what we do, and we don't follow the crowd, because at this particular point, nobody really knows what to do in the general public, and they're making a lot of mistakes. So, again, I'm very comfortable at this point with our programs. They're doing very well, and all I care is that my clients do well. So, Randy, I want to wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold. Connect with Harold, 1-800-432-1022 or rarecolorediamonds.com. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.